Hi, folks. I'm here. So, have you ever wondered if being self-employed makes it difficult for you to get a loan? You're not alone.
But
We'll talk about that right after this. Hello, everyone. Thank you so much for joining us on the Real Estate Investor Show, Hard Money for Real Estate Investors. We are Carolina Capital Management, and we are lenders for the Southeast. If you're a real estate investor, if you're interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell,
Ding, ding.
and sign up for Wednesday with Wendy.
Woo-hoo. That's just an example of how your brain will grow.
So Wendy dedicates 30 minutes per person on Wednesdays to talk about anything real estate related. So the link is right there in the chat and on the screen. So get on the calendar. She's usually booked a few months in advance, right?
Yeah.
By the way, we do have a chat section on the left-hand side of the screen or underneath, depending on the platform that you're viewing us from. I am Bill Fairman. This is Wendy Sweet, and that's
Hello.
Jonathan Davis over that side.
This way. I'll look at the screen and
So interesting weeks, huh? Or days.
I feel like every week's been interesting.
It is. It's kind of like a roller coaster ride. You never know what to expect, but that's real estate in itself.
I was probably going to equate it more to like a House of Horrors. You turn and like the mirror's all distorted and there's a tunnel
But things are good for us. For business is great.
Oh, business is good. Yeah.
People are still buying and selling houses. And
Well, here's the thing: we give you information that we think you can use.
Mhm.
You've got all kind of stuff going on in the country. Maybe taxes, maybe not.
Disease, famine,
Maybe. Well, we know we have inflation.
deflation.
We may have stagflation.
Stagflation. Yeah,
That's right.
But-
beat me to it. Yeah.
We want you to worry about the stuff that you can control
That's right.
Which is
And not
nothing.
worry
Yeah, that's
about-
right. God has the rest. So you're good.
and not worry about anything else.
That's
So
right.
let's get started with a little breaking news, if you don't mind.
This just in.
Well, not just. It was in around 8:30.
Yeah.
Just not getting to it.
Mm.
It's just time for us to repeat it.
Well, we're not CNN.
So
Thank God.
unemployment it was a little bit lower this week versus last week, which is good.
Mhm.
Yeah.
Our new unemployment claims.
Yeah.
And they continue to drop. Continuing unemployment benefits continue to drop as well. But we're still having trouble getting people to come to work.
Yeah,
So,
there's people falling off.
so they're
They
no
don't
longer
qualify.
getting those benefits.
Yeah.
But they're either finding other things to do that are under the table.
or starting their own businesses.
Could be. You don't know. I did hear something today where there's a growing group of people that are working from home.
Mhm.
And frankly, they can get most of their job done in about 4 hours.
Yeah.
Right.
Well, that.
So
kind of a waste
now
of time,
they're
wasn't it?
finding out that some of these people have actually got 2 full-time jobs, because if they can do their job in 4 hours, they've got 8 hours to do 2 jobs.
Yeah.
I want them.
They're getting
Like,
Yeah.
can you
two
all
full-time
apply
hunt-
for our positions?
Please, because we're looking for a marketing person, another loan administrative person, an accounting
Accounting
support
associate.
person.
Yeah.
Well, you won't be able to have 2 full-time jobs because some of these jobs require that you be here.
Yeah.
Sure.
Yeah. Like we do.
That's
But if you can work from home and do everything in 4 hours, by all means, have another job.
That's exactly right.
Yeah, listen, I could care less. if you have 12 jobs, as long as you get the job we want completed.
That's right.
We are results driven. We
That's
get
right.
results. I mean, I'm a firm believer. I always tell people, presence doesn't dictate productivity.
And
Just because you're here doesn't mean you're doing a lot.
That's exactly right.
That's, a lot of HR departments are of that same mind. They don't really care as long as you're not, your other full-time job isn't for their competition.
Yeah.
Right.
Yeah.
So as long as you're not violating that.
Yeah. Some trade secrets going back and forth.
It's not a big deal.
Yeah.
So I think the Treasury yield this today is like 1.3. It has been 1.2.
Yeah.
So rates are ticking up a little bit. It's nothing really noteworthy.
Right.
It's still awesome.
It's still pretty cheap out there.
and we're going to talk about that.
We still call it free money, don't we?
Our friend Randy Vetter sent us forward us a few other articles.
He does every Thursday morning, and we're grateful for that.
So one of them is kind of labeled the death of the starter home.
What does that mean, Basil?
I don't know who Basil is, but I'll answer.
That's part of Austin Powers and $1 million.
It's not a lot of money.
So,
this hairless cat.
In speaking of supply issues, this guy named Yuri Berliner of NPR News reported recently that there was an acute shortage of entry-level small homes, and according to Freddie Mac, they consider the starter home as 1,400 square feet or less.
Mm-hmm.
Okay. And in 1992, that was 40%.
82.
What did I say?
92.
That's okay. Just
It's
10-year difference.
In 1982,
yeah,
it was 40% of the newly constructed houses.
Well, and why was that? What was the interest rate in 1982?
Well,
Yeah.
I'm getting to that. And that's the first thing I started screaming at. Too.
Yeah.
And anyway, by 2019, that share had fallen to 7%. So if they're just using square footage as starter homes and not price point,
because people are downsizing anyway, so that really is data skewed.
And we get back to that. People were building 1,400 square foot homes in 1982 because the average interest rate in 1982 was 16.4%.
Yeah.
I'm sorry, 16.04%.
Yeah.
1981, it was a little higher than that. It was 16.68%.
Mm-hmm.
So people couldn't afford to buy a house because they couldn't get the financing. And in 1982, your conventional mortgage loan was a bank loan, and you had to put 20% down.
Yeah.
Yeah.
The only way you could get less than that was to do an FHA loan. Okay. Now,
are starter homes the same as affordable housing? That's a good question.
Can be.
Well, it depends.
Yeah.
And that's what it's supposed to be. A starter home is supposed to be affordable because it's your first start.
Well, I mean, in 1982, it was the only thing you could afford.
Yeah.
Well, yeah, no one could afford to buy a 2,500 square foot house in 1982, newly constructed.
Yeah.
Mm-hmm.
I mean, here's what happened in 1982 that a lot of people don't realize is that rates were really high and it was a great time for seller financing. If you didn't have to pay off your home or you didn't need the money to buy a new home and you were selling a home, if you had an 8% rate and the going rate was 16, what do you do? You sell or finance.
Yeah. Plus mortgages were assumable back then as well.
A lot of them were. Well, the FHA ones were, not the conventional.
Mm-hmm.
Again, they didn't have the Fannie Freddie securitizations and all that stuff back then either. It was either the bank held it or you had an FHA or VA loan.
Well, I thought securitization started in 73.
Well, okay, it wasn't very widely spread.
Oh, okay.
Most banks held on to their own loans.
You guys are really smart.
So there has been
at the library
recently a lot more homes that have been on the market now that are smaller, 750 to 1,700 square footage.
Mm-hmm.
So the amount of new smaller homes or existing smaller homes has increased month over month. And then the homes that are 3,000 to 6,000 square feet have decreased from 23.9% to 19.3%. So the bigger homes are not being listed. as much, and then the more smaller homes are. So I'm kind of wondering where you have real estate investors who have the small homes, right? And now they're seeing that they have an opportunity to sell because they've got a lot of equity in them.
Sure.
And so now they're letting those go. And if they're smart, they're letting those homes go that were the trouble homes.
Yeah, if they're smart. Speaking of trouble homes, I just saw on Facebook this morning, there's a house called The One. That's a 100,000 square foot house in just outside of Beverly Hills, I guess on an 8-acre cliff.
Wow.
That's being foreclosed on for 165 million. Wow. It's the guy was supposed to have it finished by 2017, so the builder still did not have it completed.
Wow.
It's now going to be on the market. They're thinking like 288 million, a little chunk change here or there. But it's just an example of, those high dollar houses, you need to be careful in that price range. Not 65 million or 165 or even $500 million houses. You need to even over 500,000, really depending on where you are.
I mean, where you are,
be careful.
Dictates that. I wanted to ask you a question on your portfolio that you have. How many of the houses that you have are under 1,400 square feet?
That's a great question. So let me think of that in my head.
See,
no pressure, hurry.
Yeah, for me, it's a really easy answer.
I'm thinking I don't have any
under 1,400.
I don't have any over 1,400.
I was gonna say I only have one over 1,400.
Yeah,
square
the
feet.
one that I did, I sold.
Yeah, and the one that I have, I don't know, I'll sell it or not.
Yeah,
We'll see.
I do have one more. I forgot about that one,
Yeah.
and that's actually on the market. I just put that on the market yesterday.
Yeah.
So, and that's out of 19 that I have right now that I'm involved in one way or the other. So, yeah.
Another thing that this article pointed out is that expectations for people buying starter homes have been raised so much thanks to HGTV.
Yeah.
That everybody needs to have this big open concept with all
granite countertops,
giant
new
homes,
cabinets, funky lights.
I'm not going to live in a 1,400 or less square foot home.
Yeah.
I mean,
to get started
to
with.
me, it's
so that's why they stopped building a lot of those.
Yeah.
Well, it's interesting too. Like it's like 1,400 square feet with all the high end finishes, or a double wide, and it's like, can't there be some middle ground between those
that's
two?
Exactly right. That's exactly right.
Like that's like, to me, that's a.
But the smaller houses, when you're under 1,400 square feet, the repair costs, the rehab costs on them are less.
Mhm.
And, countertops are shorter, so you're not spending as much money there. So you can put a little bit more into it, do the luxury vinyl tile throughout rather than carpet. I mean, it just gives it a much better look. So those tiny houses, you can really trick them out to make them look good. And when you do that, you get more money for them.
Oh yeah.
And they sell quicker.
Well, I know Michelle and I's first home.
That would be his wife.
1,300 square feet.
13.
And, it had a vaulted ceiling and
Yeah,
open concept.
It
Had
was
a
very open.
double fireplace between the dining room, kitchen, and the living room. So it had plenty of square footage for us.
Mm-hmm.
It was just the two of us.
Yeah. I mean,
And
our first
we didn't
home.
need more.
Our first home was 1,800 square feet, which we had a child at the time, but. Yeah, I remember we had to come in $5,000 over asking price. We got it, and then we sold it 8 months later for $20,000 more than we paid for it.
That's awesome.
That was in the Nashville metro area.
That was in
right?
Nashville. Yeah.
I mean, you were in Kentucky, I think, right?
No, I was in Nashville,
Okay.
or just outside Nashville.
Yeah. That's awesome.
But
Yeah.
that's a pretty hot market.
Yeah.
Wait, what? That was the end of 2017.
I think if
Right.
you had it now.
It just sold again. So it sold again a couple months ago for $40,000 more than we sold it for.
Wow, that's awesome.
Did you have a little forecast that you wanted to talk about too in the news here? It was what to expect in 2022.
I mean, yeah. So some of the articles that were sent over, kind of what to expect in 2022. I mean, obviously, we think that it's going to be a more buyer friendly.
Mm-hmm. Let's
market.
get our crystal ball out.
Yeah, like things will start. Like we see, there's a lot of construction going on now. The issue is
Workers and supply chains.
And then also what type of houses are they building? I mean, most of them are focusing on 3 2s, 4 2s, 4 3s, somewhere between that. I would say 16 to 2,600 square foot house, which is outside of what
On smaller lots.
yeah, on smaller lots. So again, the affordability of those, it's like, okay, there will be more homes. It's going to be more of a buyer's market. We don't think it necessarily means prices are going to start dropping.
Right.
It'll just mean there's more inventory available. There'll be more time on the market, and you won't have to
You won't have to bid on
bid up
Right,
on them.
right.
So
Well, I mean, we're also in fall, and sales typically start dropping in fall.
Yeah.
The times on market are longer because fewer people are looking for homes this time of the year because everybody's already in their school
Now,
district.
that
and
didn't
all that
occur
kind of
last
stuff.
year because of
Because,
the whole
well, everything
COVID
was messed
Well, yeah.
up.
situation.
everyone was working from home, and all the
Yeah.
students were virtual anyway,
Yeah,
so it
yeah.
didn't matter.
So yeah, it's all we have is a best guess.
Yeah, and we
But-
still continue to think that we still think the suburbs are going to be the hotter
Mhm.
market. Like we think that's going to continue.
We're still going to have higher prices. I don't think the prices are going to increase at the same rate they did this past year.
I agree.
But we're still going to have pricing issues because, listen, and we already discussed this. It's taking longer for them to build the homes.
Right.
They have labor issues, they have supply chain issues, and it's just taking longer. So
I think the
We're still
big
gonna have a
changes
shortage.
we're going to see is you're not going to get as many over asking price offers. In fact, you may not even get any. That you may just get what you're asking for. I think you also are going to see sellers having to do concessions at the closing,
Correct.
where they're going to have to pay a little bit more toward closing costs and repairs and things like that. So for the buyer, they're going to have an opportunity to actually do a little due diligence and choose the house they want rather than throw contracts at people trying just to get whatever they can.
Just trying to get a house. Yeah.
And which it should be like that. It's seriously abnormal right now.
Yeah. Well, I mean, at some point, I mean, again, these are what we think for 2022. But these, if we get into like quantitative easing, we can't continue that forever.
Right.
At some point,
Pendulum has to come
at
back.
some point, this has to switch. Like interest
That's
rates
right.
have to go up, and if they don't go up, what's the ripple effect from that?
Right.
Not just on our economy, but globally speaking.
Absolutely.
And before we get into our ugly question, I wanted to mention that real estate, as I always feel, is still the best investment, especially since the new administration is trying to pass a tax law that they are going to tax unrealized gains in your stock portfolios. So at the end of every year, you get your statement and you have a gain. They want to tax you on that gain, even though you
It's
haven't
not in your pocket.
exercised that purchase or sale yet. You don't have that. It's all on paper. Unless they do that with real estate as well, and I don't know how they're going to do that. They would have to apparently have to go off of every time a municipality reevaluates their tax procedures.
Yeah.
I don't know how they would do that. So now that said, you can't tax people on unrealized gains if you're also not allowing them to have losses on their taxes
Yeah, so they're going to
as
have
the
to.
prices go down. So it should offset. The point is, if you owe taxes at the end of the year and most of your money is invested in the stock market, you have to come out of pocket each year with taxes.
Right.
Yeah.
Right. That's not good.
No one really likes
so
that.
what do you have to do in order to pay those taxes? You have to sell your stock.
Yeah.
If everybody's selling their stock at the end of the year to pay their taxes, what happens to the stock's price?
I wonder. Yeah.
It's amazing how everything affects something else. isn't
Scott
it?
asked a question: are builders constructing the wrong house now? I wouldn't say the wrong house. So builders and developers, what they're doing is they're taking what the market's giving them. Right now,
Right.
it's giving them really expensive land and really expensive build costs.
Right.
So what are they doing? They're putting as many houses on those tracts of land as close as possible.
Mhm.
And that's what we're getting. I mean,
Builders are trying to build homes that
And
they
stay
can
in business.
sell in a short period of time for the most margin.
Mhm.
So they're going to build the stuff that pays them the most and has the least amount of effort involved.
Right.
I don't know what that is, but I'm assuming it's the houses that they're building now.
Yeah.
I mean,
The ones in the middle.
yeah, you don't see. I mean, there's not a lot of custom homes going on right now. I mean, it's all
You're right. Yeah. you're
tract
right.
homes that are going on.
Yeah, and frankly, a 1,400 square foot house and a 1,900 square foot house are going to cost virtually the same to construct.
Yeah. Close. Yeah.
You know what I mean? So
Mhm.
Yeah,
if you have to sell it for less, what's the point of building the smaller one,
Right.
exactly.
right? Because it's going to cut into your margin.
Well, your
Exactly.
price per square foot when it's smaller is going to sell for a higher price per square foot than the larger house will.
Well, since we're about out of time, we might as well get to the ugly question.
Hurry up.
So let's do the ugly question.
And the answer is 42.
42
So the question is,
chromosomes.
can you get a loan from Carolina Capital if you're self-employed? Well, the reason we went ahead and only gave you 5 minutes for this answer is you pretty much have to be self-employed to get a loan from us.
We give preference to those who are self-employed.
We like the fact that investing is your business, right?
Well, here's the thing. We only lend to legal entities. You can have a job that's W-2, that's not an issue, but you are essentially self-employed when you're applying for a loan because you're applying for a loan in your legal entity's name.
And do we care if it's a brand new entity and they've never used it before?
No.
That would be a negative.
That's right.
Some people set up a new entity for every single house they
Property.
construct or,
Yes.
or
Right,
purchase.
right, but they do.
Some people don't. That either one is fine.
Mm-hmm.
The better way to do that is to keep the one entity.
In Bill's opinion, he is not a CPA.
Yes. And, well, or an attorney.
An attorney will give you a different answer than a CPA.
In my
on that
opinion, I
question.
would set up a legal entity that is the beneficiary of a land trust, and you could just create a new land trust for every property,
Yeah,
and then the LLC can be the beneficiary.
you could.
That way you get your anonymity of the trust, and you
Are those
get,
the little things that crawl around the ocean floor?
and then you get the protection of the LLC. all
Yeah,
at the
but
same
there's a
time.
way to get through all of it. There's really no way to put up a solid veil of protection on what you're doing. The key is to have your house not look like a low hanging fruit. Have your company not be
Yeah.
the low hanging fruit, or to just make sure you do the right thing all the time and you won't
Yeah.
have any trouble.
I mean, every veil can be penetrated, every single one of them.
Mhm.
It's just the time and effort and money that it'll take to do it.
that's right.
So we spent like 3 seconds on the actual question, and we've rotated into other aspects.
Well, actually,
Be self-employed. That'd be
that's
great.
right.
That'd be
We
great.
like
We
it.
do not discriminate against self-employed. We
That's
actually prefer it
And we like experience, but
since we
it's
are
not-
one.
Yeah, not totally necessary.
Yeah.
We'd like the opportunity to talk with you
Mm-hmm.
and tell you about what we have and,
Yeah.
spend 30 minutes with me and let's talk about your goals and where you want to go and what you want to do. And I can hook you up with other people that can help you in the business, whether it's other lenders or other people who train people or other groups you can join to learn from.
Right.
we're
So
all
that's
about
a commercial
sharing.
for Wednesday with Wendy.
That's right.
And you can also call me. Don't
Yeah.
call Bill.
Yeah.
But call me.
Bill,
Unless you want to invest in the fund, then call Bill.
what's the what's the song? Leave me a message, maybe I'll call.
Oh yeah,
Joe Walsh.
Yeah, leave me a message. Maybe I'll call.
That's not true. I will call sometime.
Yeah.
Just
No.
kidding.
But yeah, yeah. If you all want to talk about any of that, Wendy's a great resource. If you want to get more resources to reach out to, she can do that. We can do that here as well. You can call me.
About commercial,
Commercial,
multifamily, all kinds of
Multifamily, new construction,
development.
Yeah, I mean we're I mean, we're doing new construction. We're closing. We're closing
Self-storage.
everything this month. Self-storage, new
Yeah,
construction.
we do have a variety of we are all inclusive in this
Yeah.
company.
Yeah, we like to do it all.
But it's all within that initial buy box
Mhm.
that we
Correct.
like, which
Certain
is
guidelines.
Menagerie of things
well,
Yeah.
it's all
within the scope.
it's all affordable housing on the single family side, and it's all recession resistant on the commercial side.
Multi-family, multi-tenanted properties. We like those.
Absolutely.
Not single use.
We like those properties where any moron can make money. Because if
Because one day we might have to be that moron.
That's what I was getting at.
That's right. We're past the time.
So
We're going to turn into
we're
a
gonna-
pumpkin.
Don't forget about our 1 o'clock show. We have a great guest, Tim Bratz, coming on. He's
Awesome.
one of our collective genius buddies, and he
Mhm.
is in the multifamily arena, and can't wait to talk to him. So there's the link to that show at 1 o'clock. Thanks again, folks, for joining us on the Real Estate Investor Show, Hard Money for Real Estate Investors. We are Carolina Capital Management. We are lenders for real estate investors in the Southeast. And if you are interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell.
Woo.
Ding, ding. And don't forget to sign up for Wednesday with Wendy.
Thanks, guys.
Talk to you soon.
Toodles.